We are in conversation with the Rashesh Shah, market veteran, financial services veteran, regarding budget markets. Lots. Rashesh, so good to have you on the show. We are discussing and
Hi,
chatting up
Ajay.
after a very long time. Let's get the budget out of the way. I mean, how did you read the budget on parameters of what the capital market was expecting and what came? It got digested very fast. Then on the fiscal consolidation front, and also a shade or a touch of populism, but very targeted and done very wisely.
Ajay, I think every government wants to be populist, needs to be populist because there are elections, you have to win elections. But I think what this government has done over almost 11 years now is they have managed the fiscal responsibility very carefully. And I think it has been good, partly because India's inflation has been at least relatively under control. Even in the COVID time, unlike other governments around the world, our government did not use up the balance sheet of the government very quickly to provide a stimulus and everything. So this government has been very careful. They've been fiscally responsible and they've been very strategic in their spending. Either it's on programs with DBT and efficiency in delivering the social programs, and the other is they've been using a lot of their capital for capex. I believe that last 3 4 years, the way the economy is continues to grow is largely thanks to the government's capex, because we know there is no private capex. Consumption has also slowed down. Exports have been under pressure, but it's the government capex that is driving. And I would always prefer government capex over government opex, because government spending money just for spending money is not as good as government spending money to build capex. And India needs infrastructure and all. So I think they have continued more of the same. So if you ask me in this budget, yeah, there have been marginal changes here and there, capital gains, which is, the area that everybody in the stock market enjoys discussing the most. LTCG has changed, but overall, I think it's more of the same path on which the government has been following, which is fiscal prudence along with social programs and capex spending from the government. I think that continues.
Ashish, for a moment, if you're wearing your marketman hat, how did you see this all three coming together on the capital market side and the way market digested it? What are your thoughts there?
So I don't think there was overtly anything very bad for the market. I think STT increase on futures and options was anticipated because, as you know, I think the volumes have really gone up a lot. And in a way, I think that STT increase was, I think people were expecting it. I think the long-term capital gains were one, a dampener that was there, maybe the buyback tax. But Ajay, I've learned this over the years. A lot of this are very marginal in their impact on the long term. In the short term, they have a knee-jerk reaction. But I've been in the market where there was no STT at all. In 2004 was the year they introduced STT, and then initially STT was allowed against your capital gains, and then they changed it. There was no dividend tax. Then dividend tax came in, buyback tax has come in, but the markets are still all-time high because I think what is driving the markets in India are India's household savings now truly finding a home in the market. Earlier, household savings went only into banks. Now, household savings are truly finding a home in the market. And second, companies have become stronger, banks have become stronger. We have, the last 8 10 years, were not as easy for the Indian corporate sector, but I think they have all come out well. So I think what we are seeing in the markets is a reflection of that. And obviously, India has always been a great entrepreneurial story. There are new entrepreneurs coming out. Every time we see IPOs, we see companies which have been, plugging away for 20, 30 years, and suddenly they found a room to come out with an IPO and showcase their
Sure.
business. So this is the great India story. And in fact, one other element of India story that I find very exciting is earlier a lot of these companies were in Bombay, Delhi, Bangalore. Largely, all the companies. Now there are companies coming from all over I mean, you go to and see the entrepreneurial activity in Rajkot, in Baroda, in Surat, in Indore, in Bhopal. That is very encouraging. So I think entrepreneurship is also truly getting democratized in India.
Hmm. Rashesh, you also have a very good pulse of the corporate India. How are you looking at the the labor-related reform which have been announced, especially the factor of production. They want to bring down the cost of capital, which impacts corporate India, and also especially manufacturing end, which have been reeling under pressure. Skilled labor is shortage, land issues are. It appears that they are moving in the direction to ensure cheap and easy access of labor as well as land as well.
I think you very correctly said, Ajay. I think in last 20 years, the reform on the capital side have been very useful. I think opening our markets, equity markets, bond markets, all of that has, and we have created products like REITs and InvITs and all that, AIFs. So I think there have been a lot of reforms on the capital side, but the labor side and the land side, because these are the ultimate factors of production: land, labor, and capital. I think the land and labor, still there is a lot of work to be done, though this government wants to do it. Unfortunately, a lot of the land and labor issues are at a state level. So there is only so much that the central government can do through things like the budget and other policy initiatives. A lot of the land and labor is at a state level, while capital is at a central level. So we have over the last 30 years seen a lot of reforms on the capital front. We hope to see more on the land and the labor side, but even this government tried to do some reforms on land a few years ago there to withdraw, because those are more complex. But I think it's a good start. I think we need to do that, and we need to now go on that particular path also.
For a moment, also let's talk about our markets right now, Rashesh. Are you indeed seeing froth all across, or only in certain pockets? And what do you make of the trajectory, 3 to 5 years, the way corporate earnings are growing, the way fresh supply is coming in, the prospects of equity markets?
See, overall, I think there is a lot of cash also coming into equity market. There's a lot of capital, household savings, SIP in mutual funds are now close to 21,000 crores. So that itself is 2.5 lakh crore. The total IPOs last year were only 80,000 crores. So there is a 2.5 lakh crores coming into mutual fund through SIP. Then there are insurance and EPFOs and pension funds also investing in the market. So my estimate is that the local capital coming to the market is between 4.5 to 5 lakh crores. On top of that, we have FIs also who have started investing back in the market after 3 years of withdrawing money. They have actually taken out last 3 years almost 3 lakh crores. They've started investing again. So I think there is between 4 to 6 lakh crores of demand for equity that is originating every year with Indian investors and foreign investors. Against that, I think we have IPOs, we have QIPs, we have promoters also selling, but still there is I think the demand for equity in terms of quantum is higher than the supply of equity. I hope that a few more IPOs come and QIPs happen and companies raise capital, risk capital, use that for capital formation. All that will end up being to a good use. But I think there is a lot of demand for equity investing. Along with that, I think the returns have been good. I don't think they'll be as good as they've been for the last couple of years, because usually returns tends to normalize. There is always a reversion to mean. But I always say that when I started my career, the BSE Sensex was 800. It is now 80,000. So, I mean, there has been 100x growth in India over the last 35 years that I have seen and experienced. And in that, you have seen all kinds of, we have had 9/11, we have had Babri Masjid, we have had, all kinds of, we have had COVID, we have had, taper tantrum. So overall, I think the market returns will revert to what the corporate earnings growth rate is. And I do believe that corporate earnings long-term growth rate should be about 14% or so in India. And that is what a good long-term investor in the market should get. And if you're smart and if you follow ET now and all that, and you get more ideas, you can do slightly better than that.
Excellent. Rashesh, always good to have you. You've been interacting for a very long time, and this time was a big gap, but our coffee is due at your place.
Absolutely. Ajay, look forward to it.
Thanks very much for your time.
Thank you.
If you like this video, then like, share and subscribe to ET Now.